following is a technical analysis of General Motors, a company of the consumer cyclical sector, one of the longest standing and biggest components to the big three of Detroit and the U.S. auto manufacturer sector, displayed within the weekly. And I will deep dive into the daily and find some key significant structure and technicality that has transpired throughout this span of time that is exceedingly growing more bearish as the days go by. And here we are off of a potential within the weekly realms. We have which would call a head and shoulder classic looking top figure here. The snap of the neckline being within the daily interval. Zooming into the daily interval, these are some of the key levels that I see here. And you have this big time primary long-term ascending trend line off the November 2023 lows there, and that has had very significant reactionary highs and lows across that entire sphere, with the price attempted to reclaim that potential ascending uptrend price support and completely failed. This is textbook bearish structure where a broken ascending trend line support level is backtested and rejected. In correlation of its 50-day moving average up above, you have a huge volume profile gap below this key inflection point, a vulnerable thin support zone where I believe if and when we go across under the 46 handle, GM enters a high risk vacuum where price can accelerate to the downside really quickly. When you have such a volume gap of this nature, you have bearish divergence here. This was a nice validated divergent high with weak momentum. You have the relative strength index below its 50 threshold, bearish territory within the 42 handle, and the oscillator and histogram showing negative crossovers with additional momentum rolling over on a oscillating bearish crossover. Volume is picking up slightly around this key inflection point on red bars where distribution phase is likely. Meanwhile, the fib levels aligned perfectly with major volume shelves and key psychological levels and zones. I believe GM is at a technical tipping point, a clean break and rejection of a 16-month trend line with weak momentum, increasing volume on red bars and room to fall through the volume gaps. This is a setup smart money completely dreams of. And if you're a bear and or short seller, your edge is really strongest right now if some of these key levels are taken out with conviction, where momentum favors downside within these key indicators. But again, the oscillator and the Wilder's relative strength index combo here is screaming exhaustion. Combine that with a broken structure and you're staring down a classic lower high to lower low expansion cycle. And that will be the biggest line in the sand. Off the 100 fibs 44.55 level, you have major reactionary gaps and lows, reactionary lows that have price defense has been within that entire span of time there. That is a massive key pivotal inflection point. But once again, you're paired with a broken ascending uptrend price support level, a failed breakout, rising selling volume, and the divergence acted as a precursor to this breakdown. We were off this March huge October rally, but that was the ultimate precursor, which was the technical catalyst for this huge drop to the downside on a 26% crash. Make no mistake about it, all eyes will be on the 44.41 handle, and if taken out with conviction, I would only expect a huge stops, margin calls, forced liquidations to go off, ultimately churning to the downside in a very vicious cycle narrative on a big drop. Call it a 15.8% crash to the downside, hitting target 3 at 38.94, where General Motors is arriving at a vicious crossroad with auto tariffs looming, set to ignite on April 2nd. I believe the storm clouds gathering over Detroit's steel giant as trade walls rise and costs surge. GM's global supply chains could face a brutal squeeze, just as electronic vehicle rivals tighten their grip on the market momentum. The road ahead may not offer acceleration, but a grinding downshift as Wall Street braces for impact and the weight of geopolitical tensions bears down on the engine of American manufacturing.